So I know a lot of you guys been searching that one perfect strategy. That strategy that can literally change your life in trading, that can literally generate so much money every single week, every single day. Well, I'm here to tell you that I have a strategy that helps me make at least 3K just in a week. Honestly, only trading one of my favorite pairs, which is GBPUSD. So if you guys are really interested, make sure you do me one huge favor. Go like this video like down there. Yeah, because I really appreciate it. And don't forget to subscribe. So for those that don't know who I am, I go by the name of Solo E. I am a singer, songwriter, producer, and entrepreneur. And in this YouTube channel, I teach so much and give you guys so many gems in music and entrepreneurship, branding, businesses, and day trading. So if you aren't, make sure you do me one huge favor again and subscribe to your boy's YouTube channel. So let's go ahead and talk about it. Like what I said, guys, I'm going to literally show you my scalping strategy that I use to not only trade GBPUSD, but I use this to trade GBP Yen, even Bitcoin, Ethereum, USD ZAR, AUUSD, EURUSD, Gold, US 30, and NAS 100. So let's go ahead and hop on my computer and I'm gonna show you guys what we got going on. Alright, so now we are live on my actual computer. Alright, so now we're going to figure this out together and I'm going to show you guys everything I know as far as this little strategy that can literally make you 3K every single week if you just stick to these rules. Okay, so let's go into it. Rule number one is do not trade unless you have all of the other rules. Rule number two is do not trade unless you have all of the rules. And then the final rule is, of course, do not trade unless you have all of the rules. That's like my main rule, which it goes into discipline. So right now we are currently on GBPUSD. Now, how does this scalping strategy works is I only like to focus on the 15-minute and even a 30-minute. And I know that might sound a little odd to you guys because you might either see a lot of people talk about the 5 minutes or you might even see me post sometimes when I do scalping strategies on the 5-minute. But believe me, this is going to work. So when you're in the 15-minute time frame, we are going to literally focus mainly on price action candles, price action patterns, price action candles, which is candlestick patterns, and we're going to look at market structure. So let's go into the perfect world. Now, if let's say the market is in a downtrend, right, and we know it's in a downtrend, the reason how we know that is simply it creates what we call lower highs. Now, for those that don't know what a lower high is, it's basically when the market goes all the way down and it does a pullback, it creates this structure called a lower high, which is known as a LH. Now, after that has been created, 9 times out of 10, you will get a new lower low. And the lower low is basically a move, a support that is lower from that previous low. So this is currently the previous low known as previous support. So if market was to break this support and create a new low, then we now have what we call a new lower low. And this is still a lower low, but this would be a new additional lower low. So after we get that new lower low, we always look for a pullback. Sometimes you might get that pullback back to the previous low, which would then create what we call now resistance. If that happens, what we usually see is double tops, inverted head and shoulders, or head and shoulders, and then we get another pull to go back down. Sometimes it can do two things. It can either respect this previous support or the support here, or it can still continue down. If it does, sometimes you might see another head and shoulders, inverted or double bottom or triple bottom, and it goes up. So what I like to trade when it comes to scalping is these moves here. Now, here is another hint that a lot of you guys might not know. So when it comes to price action, candlesticks and all of that, you want to look for these wick candles. When you start seeing wicks and all of these candles and they're longer, and every time you see candle being formed and you see the wicks are even longer than the previous one or they're about the same, what you can do is say that this is indecision, meaning that now you might have a structural level of support or resistance. So if we go back and look at this in the trading world, how can this work with us? Very simple. If the market is coming from a downtrend, and then you start to notice that you got to pull, or let's do this. The market's coming from a downtrend. You start to notice that now you're getting wicks right here. You know, all these wicks. What then can happen is that market will reverse. Why is it that why do we need wicks in order for us to sit here and say, oh, this is a reversal? Simple, because that's telling us that the sellers are not able to sell at this level right now. So it seems like the buyers are trying to come in the market. So when we start seeing these candlestick patterns that you guys are familiar with, these dojis, these shooting stars, all of these different things, that's when you can sit here and say, you know what? I believe it is time for us to buy. So I then like to buy when I see indecision candles. Indecision candles for me is all wick candles that's not moving nowhere, and that's just basically consolidating in that same zone area. So if we can get this in any time frame, mainly the 15 minutes, like I said, the 5 minutes is good, but in the 15 minutes, believe me, it's going to work. Let's go ahead and get into it. All right, so here you have it. So here's my rule. Rule number one, you always got to have rules when you have a strategy, because you can't always trade everything you see, and that's everybody's problem. Stop doing that. Seriously, stop it. That is not going to make you money. So rule number one is, when you only see indecision candles, when you see more than 3 wicks in a candle, and I'm not talking about baby wicks, I'm talking about long wicks just like this right here, and this right here, and this right here. When you start seeing at least 3 long wick candles, you can then say, all right, I'm going to buy. Now, here is rule number 2. Your question is, where would I buy it to? So 2 things you can do. You can either use the Fibonacci, or you can look at previous support or previous resistance. So if we look at previous support or previous resistance, we know that this is a resistance area, and we know that this is a resistance area. So we're still on a 15-minute time frame, and we're just only going to stay in a 15-minute time frame, but we're looking to take TP here. Now, when you guys enter in the market, after you get your 3rd wick, after the candle had closed, which is this right here, you can now buy it. So we're going to buy it. And then as you see, it's currently a 101. My stop loss is literally perfectly fine where it's at. TP is literally where it's at. You can ride it to here, or you can even ride it to here. Now, here's the beauty of using your Fibonacci. Usually when you draw the Fibonacci, you always want to draw it from the previous low to the previous high. Technically, this is the previous low, and this is the previous high. Now, when it comes to Fibonacci, I like to look at 2 levels of structure, or 2 levels for TP, which would be my, and I'm going to move this over here so y'all can see it, but my 2 levels of TP would be my -.27 and -.618. If I can get it to hit any of these 2 levels, that's also indication. But like what I said, you can play around with this, and you can choose which way you want to do it. I like to vice versa, so there's really no one way behind it. But like what I said, it just really depends on what the market is telling you at that time, okay? So at this time being, if you look closely, we have our 3 wicks, we have our candle close, and then on top of that we have resistance here and resistance here. So I'm going to go ahead and ride it. So now we're currently in the 15-minute time frame, so it is consolidating. This is where sometimes it gets tricky for those that's looking to only ride it to previous resistance or previous support. You would have been still holding this trade if you was to use the Fibonacci. For all my true scalpers out there that's like scalping 1 in 5 minutes, I will say this: if you do like scalping that, Fibonacci is probably the best bet for you, just because you can get in and out quicker, but you won't make as much money as you will when you're actually doing this. But as you clearly see, we just smashed that TP right there, and that's usually the TP that I'm looking to ride it to. Now, if you guys want to get a little bit more greedy, you by all means can. The best way to do it is, I always say, move stop loss to break even, at least. So let's just say we did want to be a little greedy and we want to keep riding it through. So if we want to keep riding it through, it did stop us out as far as break even. However, you didn't lose anything. But if you guys were cool with that 1-on-1 trade that we got in, then cool, bada boom, you're all set. So now let's look at it as far as the other way, so you guys can get both versions of this strategy. All right, so here we have it. Now we're currently looking at the market the other way. We're going to take this to the downside and not the upside. Now here's one question that a lot of people is going to probably be asking me, is that, well, what if market is in a downtrend? Because you have to go wherever market's telling you, you have to follow this strategy. So if market is currently in a downtrend and you start seeing wicks down here, right? Let's say you see wicks down here, but you also see wicks up here. Would this confuse you guys? Not necessarily. So the beauty of this is very simple. Just have your stop loss to the previous low, and then if the market is already a downtrend, just try to look for those selling opportunities. So I'm sorry, we're going to go this way. So try to look for those selling opportunities. This is your entry, and this is your stop loss. So your entry is here, right? And then you would just write it down here to TP, which is here. So you always want to make sure you follow the trend, regardless of whatever's telling you. So at this very moment, right now, we have wicks. We look for very long wicks. We have 1, we have 2, and we have 3. So that is telling me that we have a strong area of structure, resistance. So now what I'm looking at is, okay, since we got a strong area of structure, what can we do? Basically, what we can do now is look for selling opportunities. So what I like to do is, that's basically this candle right here, where you can enter in this candle. We're still in the 15-minute time frame, but you can enter in this candle right here, because I know I like to look for confirmations, which is engulfing candles. But with this strategy, you don't necessarily need that. As long as you get 3 long wicks, you're fine. And we got the wick before this candle, so you could have entered right there as well. But regardless, guys, your entry is here. And then how you can do it. Now, this is where this strategy comes in play, as far as me saying before, use the Fibonacci. Because if you don't have any previous structure in this area, we're not going to go too far out, guys. We're not. But if you don't have any structure, previous structure, this is now when you can use the Fibonacci. And this is also what I was saying. Sometimes I vice versa. So I like to draw my Fibonacci from the previous low to the previous high, which is basically here in this area. This is basically the previous low. And I'm going to take it, this is the previous high, sorry, and this is the previous low. So I like to look for those TP areas. So here's 2 ways I'm going to go ahead and put this down. If we were to get in this trade right here, stop loss would have been from this low, from this previous high right here. Entry is a 1 to 2, that's great. And then our final TP is here. So let's go ahead and take it to this TP here. So if we were to take this trade, let's see. As you see, it smashed it, and it started pulling back. So that's simple. Now, I know a lot of you guys, when you actually do this strategy, it's going to probably be a little complicated, because you're going to see a lot of wicks. And this is why I say it's important to do this on the 15-minute and not the 5-minute. Because on the 15-minute, it's not going to be as many wicks as it will be in the 5 1-minute time frame. So if you even want to do this in a 30-minute, this also works very, very, very well. 15 to 30 minutes, but I like what I said. I highly prefer the 15-minute, just because the 30-minute kind of pushes you away from that scalping mentality and kind of gets you more into the intraday mentality. So the 15-minute is fairly cool and better just for my scalpers. If you are intraday like myself, I'm a scalper intraday. 15 to 30 minutes is cool. I highly recommend backtesting this on GBPUSD and see how this works for you guys. And if this is that strategy, let me know. I know a lot of you guys been liking my strategy videos. Y'all been eating off just them alone. I appreciate y'all for watching them. So do me one huge favor. Make sure you like this video, share this video, and show your boy some support. If you have any questions, I will see you guys in my next video. Your boy Solo, I'm out.